Hello kind people of YouTube, welcome back to another video. Today, as always, we will be taking a quick look at the crypto markets before taking a look at some news articles that caught my attention. As you can already see them open up here. All the links of course in the description. Now, because I keep forgetting to say this, if you like videos like this and you want more, I do these daily, make sure to subscribe. But anyway, let's just jump straight into it by refreshing CoinMarketCap. We see the markets pull back a tiny bit today after a couple days with not much movement. Now the markets dropped relatively significantly over the last 24 hours, but they have recovered quite a bit of that already again. If you're looking at the 7-day graphs over here, you can see everything pretty much falling and then recovering a significant part of what they have lost. Most notably here, XRP had been down by about 8% and has recovered so much that now it is only down 4.6%. Another one of the bigger losers, Stellar Lumens here, but mostly down 1 to 3%. Not that tragic. It's looking relatively good. Market cap 216 billion, down from about 219 billion yesterday. It's a bit of a loss, but also not that huge. Bitcoin dominance going up a tiny bit to 51.9%. We had seen this drop to almost 50% again, but it's recovering a tiny bit. Seeing this, we can just see Bitcoin performing a bit better than altcoins right now. Now, with XRP, a lot of people had anticipated that with xRapid going live and swell happening, the price would shoot up. I had warned people about that for a while already, and I have continued doing that for weeks now. That I believe the reason we saw XRP crash down a bit more than other tokens, well, even not that much, down 4%, that's not too bad, but I believe the reason we've seen XRP fall when a lot of people expected it to shoot up is that people had completely unrealistic expectations about the launch of xRapid and about what they might announce at swell. Now, what they did was they announced xRapid is live, but only for 3 companies right now. So very limited use. I had been telling people for a while they are likely to roll this out slowly but surely. They are doing it with individual companies first, moving relatively small amounts of money through it first, and then it will pick up more and more as more companies sign on. That is their plan. That is how a big financial corporation rolls out a new product. They have to be careful. It's not going to be 100 companies, 100 large banks just switching over to xRapid from one day to the next. That would be completely unacceptable. No, that would never happen. So a lot of people seem to anticipate that, and now that that didn't happen, they are disappointed, and some seem to have been selling off their XRP. Now, you have to be in this for the long run. I keep saying that always. If you're in the crypto world, you should be supporting projects that have a real use case, that have a good team behind them, that have good technology, and be supporting them for the long run. If you're expecting prices to shoot up within the next couple of weeks, you're in it for the wrong reasons. Now, that can happen. There's good reasons to believe sometimes that it will, but really you should be looking at in 5 years, in 10 years. If you just want quick profits, you're not in the right sphere for that anymore. That was 2012. Anyway, let's look at some analysis and then at some news. Here the analysis this time from Ethereum World News. Bitcoin volatility hits 12-week low, ETF approval to send crypto flying. Finally, after days of mundane sideways price action, the cryptocurrency market saw some long-awaited movement on Tuesday, despite the lack of clear fundamental news or technical catalysts. But it wasn't the move that many optimists were waiting for, as Bitcoin tumbled under the $6,500 price level after days of holding above the widely regarded line of support. Although the $6,500 support doesn't hold as much significance as the $6,800 or $5,800 levels, some technicians saw this move as a short to mid-term bearish signal, even though many industry leaders expect for prices to move upwards in the coming months. At the time of writing, Bitcoin is worth $6,480 a piece and is down 1.8% in the past 24 hours. Altcoins, however, haven't fared as well, with a majority of the assets in the crypto top 10, save for Tether of course and Monero, posting losses of 3% or more. XRP and XLM, widely regarded as sister cryptocurrencies, unarguably had it the worst, falling by 8.5% and 6.5% respectively in the past day. like I just showed you guys, they have recovered significantly from that already, having lost only about half that now. While the XLM decline left some investors worried, XRP's 8.5% drop shocked many investors, as the firm behind the crypto asset Ripple recently announced a series of positive news at its San Francisco-based Swell event, which saw former US President Clinton speak on the topic of blockchain technologies and the future of humanity. Notable speakers and event attendees aside, as brought attention to by some Ripple critics on Twitter, oh my god, I'm a mess today again, sorry. XRP has historically fallen during the Swell event, despite what one may initially assume. Now let me repeat here again. People just had unrealistic expectations, and it doesn't matter as much what is actually announced and whether those news are positive. If people are expecting incredibly good news and they only get good news, that will disappoint them and that will have a negative effect on the price. And that is what happened here. If xRapid going live, if people hadn't anticipated hundreds of banks just suddenly using it from one day to the next, which we had no reason to believe was going to happen, aside from some unfounded rumors on the internet and people speculating, this wouldn't have happened. And that is why XRP always falls during Swell. People just expect everything to happen. People expect massive news to be coming out every 30 minutes during Swell. And then when they only get a few pieces of good news and not crazy good news, they get disappointed, the price drops. Happens every time. XRP will recover shortly. It is still only about 1 billion in market cap below Ethereum, so they're still very much battling it out for number 2. XRP is still doing very well, especially with everything else also falling. XRP being down 4% is not that big a deal. Anyway, back to the article. Make no mistake, despite the recent bout of slight yet present selling pressure which pushed crypto asset prices down in the past 24 hours, volatility in this nascent market has been reaching extremely low levels in comparison to legacy capital markets, that is. As revealed by Market Watch's Aaron Haken, the 30-day volatility index for the world's leading cryptocurrency has somehow hit a 12-week low of 2.55%, which is the lowest that this index has been since July 10th. Moreover, this volatility-focused indicator is now more than 500 basis points lower than 8.02%, which was where the index was when the ball dropped in New York's Times Square. So you may be asking, why has the cryptocurrency market come to a standstill? Well, a group of analysts at Element Digital Asset Management has recently sought to bring clarity to the crypto market situation, speaking with MarketWatch reporters in an email conversation, rebutting the claim that Bitcoin's relative stability can be attributed to the adoption of the digital asset as a store of value. I'm not going to try to pronounce those names because I will just mess up, and I don't want to do that. I always feel it's insulting to mess up someone's name. Element's portfolio director and quantitative research director respectively revealed that this theory is premature, alluding to the fact that Bitcoin still hasn't been widely received as digital gold. Addressing another theory, the analysts added that Bitcoin and crypto assets aren't finding stability due to increased levels of transparency, but that the market has just simply run out of juice, becoming boring. Pointing out why this market has become a bore, the two explained that the denial of the long-awaited Bitcoin ETFs likely made investors wary, resulting in a slower market cycle and less intense price action. But on the other side of the coin, if regulators were to approach such a vehicle, the Element traders added that this may signal mass adoption and would bring Bitcoin out of its slumber. Closing off their discussion, the duo wrote, "Seems like everyone is waiting on the sidelines for someone else to make the first move in what could be an extremely long game of chicken." Now I think I can more or less get behind this. Now I still think the core reason that Bitcoin has found or seems to have found more or less a bottom and just been moving around the same price for a while is that at the current hash rate, that is more or less the lowest it can go for mining to remain profitable. Now, if it briefly dips below that for a couple days or weeks, that will still be fine, but if it permanently drops under that, people will just simply stop mining it, and that would be catastrophic for for Bitcoin. So I think that in addition to a mental block sitting at the 6,000 number is the main reason we are seeing the price just settle here. But I do think they're bringing up good points, and I think one of the big things that is going on right now is that just everyone is waiting. People are waiting for news about regulation, people are waiting for products to be approved, people are waiting to see the markets move definitely either up or down. People are just waiting because this year has been relatively boring as far as price movements go. It has been incredibly exciting as far as new investment opportunities, new products, new technology, new partnerships that has been coming in every single day throughout this year. So for that, it's been incredibly exciting. But just where the price movement is concerned, 2018 has been rather boring, and all we can do at this point is wait. But we know at some point the prices are going to explode because there's just so much coming into the crypto markets. There's so much development happening, so much institutional interest that we just have to wait. We just have to wait. Anyway, let's get to some of the news. According to a Wall Street Journal article, or report rather, automated trading programs are manipulating digital currency prices. Now, this shouldn't come as a surprise to any of us. We know manipulation is going on in the crypto world, and we know that that exchanges in particular are known to manipulate both the prices and the volume, but this goes into some more detail and is a proper investigation into it, so let's read this. Automated trading programs or bots are manipulating digital currency prices on cryptocurrency exchanges, according to a Wall Street Journal report from October 2nd. Automated trading software is a program that allows traders to set specific rules for both trade entries and exits, submit orders to a market center or exchange, and then automatically executes them by means of a computer at speeds greater than any human is able. Trading programs are available for traditional and crypto markets and can be deployed for both legitimate and manipulative strategies. Addressing crypto markets, Wall Street Journal cites a lack of proper regulation as the main condition that allows bots to execute abusive strategies on an industrial level. Andy Bromberg, co-founder and president of startup CoinList, told Wall Street Journal that this sort of activity is rampant in the market right now. It hurts the market's reputation and it hurts individual investors. Here, this is what I've been saying on this channel since I started it. Like, this kind of stuff, it benefits individual investors, or rather the individual investors who are doing this benefit from it. Obviously, if you're manipulating the market, you're manipulating it usually to make a profit. Everyone else and the markets as a whole is hurt by this, especially with major outlets like Wall Street Journal reporting on this. That is a huge image problem for crypto. All the scamming going around, all the manipulation, all the fraud in our community still. We are getting better, but all of this needs to end. This needs to become less, because a big hurdle to mainstream adoption, a big hurdle to just normal people, traditional finance, regulation, is that people need to see that we can play by the rules. That doesn't mean it necessarily need to be the old rules, but it needs to be a general standard of not scamming each other and manipulating the markets. So anytime this happens, that reflects very badly on all of us. And I'm always sad when we get news of this, but it needs to be talked about. Anyway, back to the article. According to Wall Street Journal, $80 million digital currency hedge fund Virtual Capital uses its own bots on a number of crypto exchanges around the world. Stefan Xin, I probably mispronounced it, I'm very sorry, managing partner of Virtual Capital, told Wall Street Journal that he is in a constant cat and mouse game with enemy bots. Per Wall Street Journal, Virtual lost funds on certain trades in Ethereum earlier this year after a harassing bot targeted the fund. The Wall Street Journal further explained the strategy used by the bot. The bot strategy was similar to spoofing, a practice in which traders enter fake orders only to cancel them. The tactic, aimed at tricking other investors to buy or sell an asset by falsely signaling there is more supply or demand, was outlawed in US stock and futures markets in 2010. The implicit message here being that it needs to also be outlawed in crypto markets. This is why we need regulation. It's not to fuck us over, it's to make sure that stuff like this doesn't happen. Back to the article. Another example of price manipulation in digital currencies cited by Wall Street Journal is trader, I'm not gonna try to pronounce that name, I'm so sorry, who began trading Bitcoin in 2011. He reportedly developed a program called Quadlo Trader that was promoted as the best market manipulation tool in the world of crypto. The idea of the program is to make market manipulation easier by using built-in tools like a special tab called Whale Tools, which executes several abusive strategies. See how insane this is? We're actually developing products to make manipulating the market easier. It's insane. That is absolutely insane. That is why people are scared of crypto. That is why people are worried and why people think that only illegal stuff is happening in our markets. Anyway, back to the article. I'm just ranting. He told Wall Street Journal that it is pointless to ban manipulation in digital currencies and that it would be more effective to provide manipulation tools to small traders. If everyone can manipulate, then nobody is manipulating. You can't ban anything from people who are dedicated to doing something. This is what any criminal who wants to continue doing his digital behavior says. Digital criminal behavior says. This is complete nonsense. This is a non-argument, a complete non sequitur. Even if everyone has access to manipulation, people with more means, people with more knowledge will always be able to abuse these systems more. So just giving it to everyone does nothing. Instead, give it to no one. We can combat this reasonably well. Obviously, you can never catch everything, but we can make sure the biggest manipulation strategies are not possible. And that is what we should be aiming for, not giving everyone manipulation tools. He's only saying this because he personally profits from more people getting these, because he's selling them to them. Anyway, back to the article once again. Notably, similar programs are not permitted on traditional securities exchanges. The New York Stock Exchange regularly monitors operations for illegal trade activities and abusive trading and punishes violators. Last week, the Wall Street Journal reported that nearly $90 million in illicit funds had been funneled through various crypto exchanges, including Shapeshift. Yesterday, Shapeshift founder and CEO Eric Voorhees refuted Wall Street Journal's claims. He stated that the publication had misrepresented facts and made mistakes in their reporting due to a lack of knowledge of the exchange's operations and blockchain technology. Now, it's of course always possible that Wall Street Journal made a mistake here, and I haven't looked too far into the details. But as an outsider looking in here, it seems way more likely to me that Shapeshift here is trying to cover their asses. Because they're also switching over to a membership system, and if that isn't to combat abuse, then I don't know what it is for, and you don't need to combat abuse if abuse isn't happening on your systems. So the way I'm seeing it, that appears to be more or less an admission that something is happening. Now, of course, I'm not saying it definitely is. I mean, first of all, that could be construed as slander, and I'm surely not slandering them here. I'm just saying, from an outside perspective, seeing these two squared off, seeing these statements, that is what it looks like. Anyway, next article. Mining giant Bitmain inquires Bitcoin Cash wallet startup. Now, we see this a lot lately. We see a lot of large mining corporations and a lot of large exchanges buying up startups all over. They're turning into, they're following the same trajectory that a lot of Silicon Valley firms have been following for the last 20 years or so, where you build up your own company and then you buy and buy and buy and buy. You acquire a lot of other companies. So let's look at what exactly they're doing here. Crypto mining behemoth Bitmain announced Monday it had acquired the startup behind an open source Bitcoin Cash wallet called Telescope. The browser-based wallet was launched earlier this year in an effort to enable instant Bitcoin Cash transactions. At present, Telescope can operate on Google Chrome or Mozilla Firefox. According to a press release, though, the team plans to expand to other platforms following the acquisition. Supported by BitPay and MoneyButton.com, the wallet stores cryptographic keys within a browser extension, meaning transactions are signed by the user's browser directly. The project says that storing funds in this way offers users similar security to standalone wallets. And I'm not going to try to pronounce that, I'm sorry. The head of international press relations and communications at Bitmain said in the release that Telescope brings a simple but key innovation to the Bitcoin Cash ecosystem. He added, "Browser-embedded cryptocurrency wallets are a promising technology. The Telescope development team is doing some very interesting work, and we look forward to working together with them on the Telescope project and future Bitcoin Cash projects." Bitmain holds nearly 6% of the total Bitcoin Cash in existence, as previously reported. The company has faced some controversy for this decision, given that its holdings have devalued through the 2018 bear market and that it's planning a Hong Kong IPO. Specifically, while Bitmain held nearly $900 million in the cryptocurrency at the beginning of 2018, its value has depreciated roughly 20% in the last 10 months. Do they mean roughly 20%? Okay. At press time, Bitcoin Cash is trading at $535 on average, according to CoinDesk's price index. Now, we see here once again that a lot of crypto tokens are not as decentralized as we would like to believe. With Bitmain alone holding 10% of Bitcoin Cash, we see something with Bitcoin where I believe it's 3 exchanges that together hold over 50% of the total supply and would be able to use 51% attacks with that. So a problem with decentralized systems, if a lot of people hold it, it becomes more centralized again. Here we see 6% with one account, with just one company. But that's not a dig at Bitcoin Cash. This is the case for pretty much all cryptocurrencies. There is always someone who holds a very large amount, and usually a small group of people controls about 50% or so of the supply. It's just good to keep in mind when we're talking about these, especially when we're attacking individual tokens for not being decentralized enough. A lot of the tokens that have very decentralized technology are in reality not that decentralized, because a lot of tokens are being held by a few people anyways. But here, main story here, Bitmain becoming even bigger by getting this wallet startup. Now, browser wallets, they're not the only ones doing this. We see Opera integrating a wallet directly into their browser now, so this is definitely something where more movement will happen in the future. And it looks like Bitmain is positioning itself to become a major player in this, so let's see what will happen there. Next up, South Korea. Their policy chief calls for legalization of ICOs. Now, South Korea is the world's biggest crypto market, which you always have to keep in mind. What is happening in South Korea is at least as important for crypto right now as what is happening in the United States. Let's read the article here. The chairman of Korea's National Policy Committee has called for the legalization of ICOs, provided that a regulatory framework is put in place. According to a report from CoinDesk Korea on Tuesday, I'm not going to try to pronounce his name because I don't speak Korean, who is a member of the country's governing Democratic Party, said that with token sales becoming a global trend, I do not want the ICO door closed completely. The state should not ignore the issue. The policy chief spoke earlier Tuesday during the 8th plenary session of the National Assembly, at which lawmakers posed questions to the administration. In order to create trust in the industry, ICOs should also be regulated, he stressed. However, the official pointed to reluctance on the part of the government to draw up new rules as a prevailing issue. Specifically, he said that fraud, speculation and capital laundering must be strictly prohibited, and the crypto industry would need to self-regulate and introduce safety standards as well. The country's financial watchdog, the Financial Services Commission, announced a ban on ICOs in September 2017, although the law has not yet been enacted according to the report. The lawmaker pointed to the economic advantages of token sales, saying that while there is a pessimistic view of cryptocurrencies in some quarters, many token projects are seen as having a viable future. Raising the vast sum of money that has been raised in some token sales, Min said, we can see that the flow of investment is clearly changing compared to ICO and angel fundraising. The ICO has raised 1.7 billion for Telegram and 4 billion for Block 1. It is getting bigger and bigger. I'm gonna finish this article here. You can read the rest. Of course, the link is in the description. I think this will be a step in the good direction for South Korea if they can make a regulatory framework for ICOs that is fair but that doesn't outlaw them. Right now it's a bit of a shame that such a big player in the crypto world has kind of locked itself out of ICOs. And ultimately, ICOs, if regulated and taxed properly, are also great for a government. And even without taxing, allowing ICOs in your country means that new startups essentially are created, that jobs are coming, that funding is coming into your country. So South Korea, don't be scared of ICOs. Just make sure you get a good, fair, transparent regulatory framework, and they will come, and it will be fair, and it will be fine, and it will be good for everybody. And now, last but not least, we talked about TRON buying BitTorrent and integrating their token into the software a while ago. Now we have more details, so let's read this article here. From CCN, TRON launches Project Atlas to bring BitTorrent users into its blockchain. TRON is aiming to bring blockchain and file sharing together with their latest venture, Project Atlas, which will blend blockchain technology with BitTorrent's massive peer-to-peer infrastructure. TRON acquired BitTorrent in July 2018, along with its 100 million active monthly users. BitTorrent is an established peer-to-peer network with a developed and tested infrastructure, but only time will tell how well the collaboration will work. It's an intriguing move, but what does it mean? Peer-to-peer file sharing has always been a popular way of exchanging information and media online, with around 27 million people using it to share or download files every day. It's clearly an important space and dates back to the early days of the internet. File sharing advocates are quick to call attention to its value in promoting democracy, openness, and the free exchange of ideas. Its detractors, of course, will point to the misuse of file sharing and torrenting platforms by pirates and criminals. And let me get my own opinion in here. There is a kernel of truth to both sides. Those both make good arguments. As someone who has been in this world for a long time and who has been using file sharing technologies for a very long time, they have, at the time they were invented, they had pretty much unprecedented potential for a free exchange of ideas and technology and knowledge. And you still find that usage. You find a lot of software is being shared through that can be used freely. Countries that have a lot of censorship tend to use BitTorrent for information sharing. For instance, some countries have blocked access to Wikipedia. So what some people have done is they downloaded a large part of Wikipedia. I think some even downloaded all of Wikipedia. And they're sharing it through file sharing networks like BitTorrent. So there's immense power here. And it's a very democratic system. Very much a precursor for blockchain technology in many ways. So there's definitely a point to be made for both sides here. And yes, the primary use for file sharing in, let's say, in the developed world is for sharing files illegally. That there's no way around that. Movies, music, games are being shared on there that are copyrighted, and that is simply true. But a lot of power in that, and now TRON is integrating it with blockchain. Back to the article. Still, many projects in the space are committed to making the internet a fairer and more decentralized place where users can interact directly with one another instead of relying on centralized third parties. In this sense, it has something in common with the world of blockchain. Project Atlas is an attempt to fuse the two spaces with the aim of improving how file sharing works. The aim is to improve the way BitTorrent works by introducing blockchain technology and tokens. BitTorrent already has reward systems in place to encourage users to share files for longer and be responsible members of the community, but TRON hopes to use tokens to further this. The system will use tokens to reward users who seed files for longer and use faster nodes, as well as those who share more of their bandwidth and storage space. This way, they hope to increase download speeds and make the file sharing experience smoother and more pleasant. If you didn't understand what any of this meant because you're not using BitTorrent technology, have never used torrenting, a very simple explanation is traditionally when you're downloading a file, you're going to a website and the file is there and you're getting it straight from that website. For torrenting, for BitTorrent, the file isn't in one place, but rather you are connected to a bunch of other people who all have either the entire file you want or a partial file, and everyone is sending you bits and pieces, and then you, once you have that file, are also sending everyone bits and pieces, so there is no one central place the file is coming from. And what seeding files is simply the act of, once you have that file, you continue leaving it on your system, you continue being connected to the network, so you can help other people also get it. You're sending parts of your file, you're copying them to other people. And that is what people are being rewarded here for actually seeding the files they downloaded. What is very much hated in the BitTorrent world is so-called hit and running. That means you download a file, you take advantage of everyone else being so kind to share their bandwidth with you, to share the files. And then the moment you have the file, you disconnect or you delete the file or you don't give back. And seeding is simply, once you have the file, you wait, you let other people also download it from you. You remain a node on the network that other people can grab the file from, so it doesn't become unavailable, because that happens with torrents a lot, especially torrents that are a couple of years old, that are for more niche things. After a while, you can download the torrent file and it will try to connect you to other people who have the file, who can give it to you, but no one will be there and you just won't be able to get the files. And rewarding people for seeding files better and longer means that won't happen as much. So this would be a good improvement to the torrenting system as a whole if they can successfully incentivize people to seed better and longer. Back to the article. It's also backward compatible, which means the original BitTorrent software will continue to work while new changes are being made. The team has promised to keep BitTorrent products free, which should be a relief for the software's user base. The project could help encourage more responsible usage of torrenting and improve user experience. On the other hand, torrenting has found it hard to shake off its shady reputation, and turning this around could be a challenge. Now, the first time we were talking about this, I was a bit unsure about the idea of integrating tokens into torrenting. But from what I understand, what they're going to do is they are going to hand out TRX tokens, so the TRON tokens, to people who are seeding files for long and well. So they're essentially they're paying people for being good members of the community. I was worried what they would be doing is you would be able to pay them to get priority, to get faster downloads or something like that. That doesn't seem to be the case. So if this is what they're doing, if they're handing out tokens as an incentive for people to just be acting good to each other, to be constructive members of the infrastructure, then I think that is beautiful. I'm still waiting to see more details about what exactly they're doing. They might already be around, I just have to look for them, but I'm a lot less worried about what they might be doing with BitTorrent now. I was a bit worried at first, but this is sounding relatively positive, especially keeping everything free. I'm very much a supporter of that, because BitTorrent torrenting, it was always about a very democratic thing. It was free access for everybody. Everybody was equal. You couldn't buy faster speeds by paying more for it. Everyone could get everything. It wasn't exclusionary. So this sounds like they're going in the right direction with this, like they're acting in the spirit of the original product and technology. Anyway, I'm gonna end this video here because it's once again been over 30 minutes. As always, thank you so much for watching. Please do subscribe if you want more videos like this. All the links to the articles are in the description, as well as an email address where you can mail me your questions that I might include in a question and answer video soon, and ways to support the channel if you would like. For instance, there's donation links through PayPal, there are crypto donation addresses, and another way to support the channel, if you don't have a Binance account and you would like to trade there, Binance of course has a ton of tokens on it. You can use my referral link in the description. It won't cost you anything, but I get a small part of your fees whenever you do trade, so that would also be much appreciated. Anyway, I'll be talking to you guys soon. Thanks a lot for watching. Bye.